Oh, welcome into a daily editorial here on the KE Report. I am chatting with Jordan Roy-Byrne, founder and editor of the Daily Gold. And Jordan, one thing that you and I have been talking about now for probably a year is that for the gold market and the gold stocks, it's all about a Fed rate cut. The Fed is paused now, so they've gone about 90 degrees from their quantitative tightening when they were raising rates and slowly unwinding their balance sheet. And now the market even is starting to price in a rate cut by the end of the year. I think the odds right now for that is about 84, 85%. So you know what? Odds are in the favor of some sort of a rate cut by the end of the year, but there's still so many question marks around. Some of your recent research that I've been reading has shown that gold stocks have typically bottomed about a month before a rate cut happens. What are you seeing in the gold stock chart that could be telling us about a potential rate cut?
Yes, Corey. It's interesting because the technicals on gold stocks, I've been thinking they could have a dump lower, but after today, they could be, they could hold up for another couple weeks or another month maybe. So the advanced decline line on GDX has been atrocious, for lack of a better word. But over the last month, really, the miners they've kind of gone a little bit lower, and it looked like they were going to dump lower in the last week or two. And today we're getting a strong day, so maybe that puts in the worst case scenario some kind of a temporary low. But it remains to be seen if this will be a more important low. I'm not in looking at silver's chart has been a mess. I'd like to see that go lower, a little bit lower, and possibly make a double bottom. Same thing with the gold stocks. I'd really like to see them go lower and make a double bottom, but who knows if that's going to happen or not. You said it with the rate cuts in gold stocks. This is looking at 11 of the past 13 rate cut cycles, and most of the time in those cycles, the gold stocks do bottom a month before. I mean, almost all the data, it's like they bottom, I would say, anywhere from 2 months before to 1 or 2 months after. But if you even zero in on that, it's really a month before when it tends to happen. So, gun to my head, I would say the Fed's going to cut rates in September. And if that happens, we probably get a late summer bottom in the gold stocks. You get a possibly a late July or an August low. And who knows what level that could be at. The data doesn't tell us if it's lower than the level that we're at now, or, it could be a higher low from where we are now. I don't know. Um, Big picture, I mean, I'm not super thrilled about where the technicals are for precious metals, but that rate cut is really informing my outlook because you can't fight the hit. You can't fight against such strong history on that. And the telling thing to me is that they really perform well after the cut, and they don't discount it that much in advance, other than a month before and sometimes 2 months before. So that's why I'm not that concerned about where precious metals are right now. Now, if we're looking forward, Corey, the real key is this just a one-time cut, and then the economy and markets are okay into 2020, and they don't, cut again for another 2 years or whatever it is? Or will this cut be the start of a series where they cut in September, they have to cut in December, then they cut again in March next year? In that latter scenario, that's where you actually get a bull market in precious metals, because you see precious metals doing well when the economy and markets are rolling over, and that necessitates the Fed doing multiple rate cuts. That's a bull market for precious metals. However, in the other scenario where, we're just going to cut once, or maybe we do one 50-point cut and that's it for, 6, 9, or 12 months. In that scenario, you do get a good rally in precious metals, but if that scenario also pushes the S&P up to a new high and it performs okay for a while and doesn't roll over, in that scenario, that's again where you just get a rally in precious metals, and then it probably peters out, and it remains to be seen after that, if precious metals go into a bull market or if they start giving back the rally. So anyway, in these scenarios, I'm looking far ahead, but the real key thing, the key takeaway here is, if you think the Fed is going to cut in September like I do, we should probably look for a low in August or late July. However, if you think the Fed is not going to cut till December, That could be a time where maybe the gold stocks bottom like 2 or 3 months before than rather 1 month before. So those are the scenarios that I'm looking at right now. But again, if the Fed cuts in September, we're gonna see a good move at least from August and potentially into the end of the year.
All right, so all about Fed rate cuts, but in the interim, let's say over June and even into most of July, one thing that we have seen, let's say for GDX, is a very tight range. Over the last month, the GDX has moved a maximum of 5%. That is how big of, or that's how small of a range it is. That to me says that it's coiling. It's getting ready for either a move up or a move down, a temporary breakout in a sense. Are you seeing the same thing, or could we be in this tighter range until maybe these stocks do tell us that a Fed rate cut is coming?
It's really hard to say because you can see them trade up out of this range and then kind of roll over again. So I wouldn't get too excited about just GDX or GDXJ breaking out of these ranges unless the Fed, does a surprise cut in June. I'm not terribly thrilled about the price action in GDX and GDXJ and the HUI as well. I'll have to see my oversold or my breadth indicators are not updated yet, but like I said before, I mean the advanced decline line at GDX is really weak, and I mean with that said, I mean I would be surprised if we get a lot more strength here. We could get a little bit of a rally because it looks like we've stabilized for the time being, but I'm not going to profess to know where this thing is going over the next month or two, over the next couple weeks, except that, again, if the Fed cuts in September, we should probably anticipate better price action showing up as we get into late July and August.
I have to say, it sounds like as optimistic as you are because you think that there is a Fed rate cut coming. The markets aren't exactly, or the charts aren't exactly lining up with this optimism. Can you balance that out for me?
Well, the way I would balance it out is it's possible that the gold stocks could trade lower and that they make a low at a lower price in, let's say, late July or August, because that would line up with the 1 or 2 months before the cut. So it's just difficult for me to it's difficult for I mean that's what makes me bullish on the sector. So looking at the charts of GDX and GDXJ, I mean it's possible they could somehow look more bullish a month or two from now, but where we are now, I don't see anything especially bullish in the charts. And if we're looking at the short term, the gold stocks, they look like they've stabilized for the time being. So I guess that's kind of where I'm at. I don't see any really strong evidence that makes me want to make a strong forecast here in either direction, other than the potential of the rate cut coming. And I think that's really, I mean, just to go on a side note, I mean, this is why it's important to look at fundamentals. Most technical analysts, they just draw a bunch of lines and only look at the chart, and they're not really considering fundamentals and what's going on as far as macro. But I mean, because I think that's really going to impact where we're going. I mean, if we don't get a rate cut until December, we're probably going to see more weakness in the summer. If we get a rate cut in September, we're probably going to we might see a little weakness before July or August. But by the end of the summer, the precious metals are going to perform well if they really sniff a rate cut coming in September. So I would just say step back and pay attention to the fundamentals here as much as the technicals.
So what are the fundamentals that you're going to be watching to tell us that the Fed will be cutting? Everybody says that it's all about the U.S. equity markets. If those go through a big or more severe decline, that's what's going to force the Fed's hands. Is there anything else that you're going to be watching closely?
Well, that's a great question. I mean, I would also watch bonds because bond yields have been plummeting. I mean, we have the 2-year, at least coming into today, it was at a low of 209. And the Fed funds rate, the 2 years a proxy for the Fed funds rate. And the Fed funds rate, is in that 225 to 250 area. And I think at the end of last month, it was at 2.42. So the 2 year is basically pricing in one rate cut right now. But I would keep an eye on bonds because they're really, really stretched, which means interest rates are really stretched on the downside. It looks like we could have seen a blow off move in that in TLT, although today it's up again. Yesterday looked like a blow off top. So I would be, I mean, it's tough to call, Corey, because the bond yields are pricing in a rate cut right now, but they could rally a little bit, for a couple months, and that could make people think, well, maybe we're not going to see a cut in September. So, that could kind of throw things off a little bit. So you got to watch bond yields. Like you said, you got to watch the stock market. Those are basically the things to watch, in my opinion. But I mean, it's tough because look, every day it can change. We get much stronger bond yields and a strong rebound there. That's going to make the market think, we're not going to get a cut in September, and they're going to focus on, end of the year, early next year. So we don't know, but, also economic data. I mean, the data that's been coming in looks like it's been getting weaker and weaker, but of course that's backward looking. So very, very, very interesting situation here. A lot of moving parts, but I would again focus on the stock market and bond yields first and foremost.
Okay, yeah, that's enough said. I agree with you that those two are going to be key considerations for the Fed. It's just tough right now because there are so many kind of question marks in the market, and everybody is just trying to predict what the Fed is going to do. But they've been on record quite a bit recently saying that they are very much in a pause formation. However, hey, that can all change again just on the back of one or two bad data points and a bigger market move. Jordan, good chatting with you, buddy. I know not much more to talk about here, but it does sound like if the Fed does cut in September, then good to have a position in at least some of the good quality juniors or just general resource stocks for when that move could happen about a month before. Jordan, good chatting with you. Thanks again for your time today.